there, and thanks for tuning in. I'm Brianne Sosha, a Las Vegas-based certified financial planner, also known as the Financial Yogi. Each week, I deliver a short financial video meant to be educational, easy to understand, and relevant to your life. So welcome back for part 2 of the insurance series. If you missed part 1, where I discuss different types of insurance, make sure to check out my YouTube channel or my website, financial-yogi.com. Today, I want to talk to you about life insurance. Life insurance has multiple uses, including charitable giving, covering your heirs' estate taxes upon your death if you have significant assets, and even building cash value for the purposes of saving for college and retirement. But for the purpose of today's discussion, we will be focusing on life insurance as income replacement in the untimely and unfortunate death of either yourself or a loved one. If you are dependent on someone's income or someone is dependent on your income and there aren't enough assets to replace that income in case of a death, you may be a likely candidate for life insurance. There are many types of life insurance, including term, which is only in place for a certain amount of years. For example, until your children are grown or until you are of retirement age. Permanent insurance, which you may have heard called whole life insurance, typically lasts into old age as long as you pay your premium and may also build cash value, depending on the type of policy that you have. Deciding which type and how much life insurance to buy is a personal choice. There is no one-size-fits-all. Some people like to have enough coverage to make sure their spouse could pay off the mortgage and possibly put their children through college. Others may prefer to cover their spouse's expenses for 1 to 2 years after a death. And sometimes it simply comes down to cost and what's affordable for your budget. Being a non-smoker and in general good health will greatly reduce your costs, but you may be surprised, even if you have health problems, you may still qualify. There's no harm in applying, as you do not have to accept or pay for the policy if it ends up being out of your price range. Remember that as life changes, it may also be important to update your current policy or get additional life insurance. For example, if you've recently gotten married or after the birth of a child. Life insurance policies should be reviewed annually as part of your financial plan to see if any changes need to be made. If you have life insurance and you aren't quite sure exactly which type and how much you have, I'm happy to help you dive into the details of your policy. Or maybe you aren't sure if you're paying a fair price or whether to get life insurance independently or through your employer. I can help you answer those questions as well. As always, please reach out to me with any questions you may have.